An early look at what we can expect from the local market given those leads. Stan Shamu from IG in Melbourne joins us now. And just looking at that Australian US dollar cross, Stan, we did see the Aussie rally to more than 104 overnight, its highest since back early February. What can we expect throughout the region, I suppose?
Yeah, absolutely. We saw the Aussie dollar continue that momentum that we saw in Australian trade yesterday, just on the back of those jobs numbers. Of course, it managed to print a high just above that 104 level, but it certainly seems like it's firm resistance in that region. We did see this currency pair struggle quite a lot in that region over the past few months, so wouldn't be surprised to see some sellers start to come in and just start to take profits after what was a monster run from what we saw at the beginning of the week. Of course, the pair was trading at around that 102 mark on Monday, and it's really put on such a show this week, and I'm sure quite a lot of traders will be looking to take some profit heading into the weekend. So it wouldn't be surprising to see that pull back quite significantly in Asian trade today. I suppose what was the most surprising move in US trade was the fact that we actually saw a positive jobs numbers print, but the US dollar didn't quite manage to continue its run as what we've seen in the past few weeks, whereby it rallies in line with strong jobs numbers from the US. So we actually saw it give up some ground to most of the major currency pairs, particularly the euro. We saw a sharp reversal from its 3-month low in the euro dollar. It's back above that 130 level. We also saw a sharp reversal against the pound. It got back to that 150 level as well. So it certainly seems like a lot of traders out there think maybe the US dollar might be a little exhausted, but should we continue to see this these positive data prints from the US, particularly later today when we've got quite a bit of a data dump from the US, including CPI, the Empire State Manufacturing Index, and some consumer confidence numbers as well, then we probably will see the US dollar start to regain its ground again. But for now, I think in Asia, what's probably the most important pair to look out for will be the US dollar yen. They obviously had their 3 nominees voted through the lower house yesterday. Today they've got the upper house to contend with, and that's where Prime Minister Shinzo Abe's LDP doesn't have a majority. So it certainly will be maybe a reason to warrant some caution for the dollar yen. Of course, it's still holding on to that 96 level. It managed to creep higher to about 96.59 overnight, but we'll have to wait to see how it plays out in Asia, and that might be the key catalyst for the region today, considering there isn't much on the macro front today. There's not much on the local calendar at all to look out for, but no doubt we'll continue to hear locally a bit more about what analysts feel about this jobs report from yesterday. We've heard a lot of doubters out there just thinking the numbers are a bit too skewed to the part-time employment front, and of course this coincides with an election year as well. So we'll have to continue to assess whether or not this is a sustainable move in the jobs numbers, and whether or not this will continue to underpin the Aussie going forward.
Yeah, just on that US dollar pulling back despite all these strong economic indicators during the session, what do you think that was down to, Stan? Is it a bit of profit taking, or is it that perhaps it's rallied too hard on perceived optimism in the economic recovery there?
I think it was just a balance of factors, really. It really has been a few disjointed sort of moves in the currency space. Of course, like with the Aussie dollar, it rallied through Asia, but we didn't quite see the euro or the pound respond in the same way. But of course, the euro managed to reverse sharply with a pretty successful bond auction in Spain, and of course this European summit that's going on, and a separate meeting happening as well with Euro finance ministers to do with a bailout for Cyprus. So there's quite a few individual issues to contend with for different currency pairs. But overall, I think because unemployment claims are a weekly event as opposed to other jobs numbers, which are a bit more long-term looking, then you know, it probably doesn't have as big an impact on the US dollar. But then if we do bring in a few factors at the same time, like the amount of data we've got later on today, then that might have a bit more bearing on the US dollar. Anyway, the US dollar had a pretty strong run, so at some stage we were likely to see either US equities give in or the US dollar give in, because the relationship between US equities or equities in general and the US dollar is generally inverse. So what we've actually been seeing over the past week or so, where equities and the US dollar rally in line with each other, is not something that markets generally exhibit.
All right, Stan Shamu from IG, thanks so much for the update. An advisor to the federal government on skilled migration says some of the Prime Minister's comments about health workers seem